So welcome everybody to our webinar this morning. I'm Heather Singleton. I'm the interim president and CEO of the Rhode Island Hospitality Association and the Rhode Island Hospitality Education Foundation. We're excited today to have Patty Colarossi and Cheryl Barnes from the U.S. Department of Labor with us. They're going to be shedding light on topics that impact specifically the hospitality industry. We know that managing payroll and human resources can be very challenging. There's many complexities here in our industries, in particular, child labor regulations, classifications of salaried employees, compliance, overtime, Fair Labor Standards Act. There's just so much that you all have to navigate on a daily basis. So it's extremely important for us to go through all of the information that Cheryl and Patty are going to share today. I encourage all of you to write in your questions in the chat. Cheryl is going to monitor the chat for us and help out with the presentation. We will also send a copy of this recording out to all of you in case you need to go back and reference it afterwards. So without further ado, please help me welcome Patty Colarossi, the Assistant District Director of the U.S. Department of Labor, Wage and Hour Division, and also Cheryl, our Senior Investigator.
Thank you, Heather. And I think I met some of you a couple of weeks ago, and I'm looking forward to giving you more information on the Fair Labor Standards Act. I'm going to share my screen, and I think where we have the number of people we have, I think this can be interactive. So please, I think you can, if you have a question, I think there's a raise hand button that we can certainly answer your questions as we go along. And if it's something I'm going to cover a little later, I'll certainly let you know that we'll get to that. But please ask questions at the end. If you have additional questions that people have logged off, we can stay on and answer your questions. But we want to be able to answer whatever questions you have. And Cheryl's going to monitor the chat as well. So I'm going to share my screen. So we're going to start out by, I'm going to cover the Fair Labor Standards Act today. And I encourage you, for whatever Cheryl and I present today or talk about, we're going to be talking about the federal law. So whenever I reference something, it's the federal law, and you always want to remember the state of Rhode Island has different provisions, and you want to always check with both of us, because it's always the stricter of the two. Although our laws are all similar, there are some differences. So we're going to talk about coverage, like if your business is covered, what the expectation is, because in order for us to even enforce the Fair Labor Standards Act, we have to have coverage. Then we're going to touch a little bit on minimum wage and overtime and youth employment and record keeping. And then I'd like to also kind of give you some hot topics at the end of wage and hour and certain things that we're doing and certain seminars we have coming up, and just to encourage you to know where your resources are with not just Rhode Island Hospitality, but with us as well. So the first thing we have to have, even before we go to coverage, is whether or not there's an employment relationship. And that means, you have some kind of relationship. When you hire someone, you're going to set their pay, regulate their hours, and they are an employee of your establishment. Once we establish we have an employment relationship, we look to see whether or not whether the enterprise is covered or the business is covered, either as an enterprise or individually. And this is just a quick stat of, businesses that are covered and how many workers. There's 7 million workplaces with 135 million workers that are covered under the Fair Labor Standards Act. It's very unusual for a business not to be covered either as an individual or an enterprise when we do when we look at businesses. So first, we have two types of coverage, and one, enterprise coverage, is the most common, and that's one where your enterprise has over $500,000 a year in gross receipts, and you have some goods that come in interstate commerce. You may have supplies you get from another another vendor out of state, you may send emails. It could be a wide variety of things, but you basically, if you have that sales volume, most likely you're going to have the latter. Individual coverage is a little more trickier. It's by employee basis, and we're going to touch a little bit more on that. So, like I said, enterprise coverage, if you have the ADV of over 500,000, which is the annual dollar volume. Wage and Hour likes to talk in acronyms, so excuse me if I say an acronym and you don't know what it means. I tend to forget sometimes as I move on, but and you do have to have 2 or more employees. So there's also named enterprises in addition to that. And those enterprises don't necessarily have to meet the $500,000 in volume. And that usually is a hospital, a medical or nursing home, schools, government agencies, and preschools. Now, when I say preschools, oftentimes this is one that comes up. Daycares would be covered under that preschool provision. So, oftentimes daycares can be very small, and you think, well, they're so small, they probably don't have to pay overtime, but they do. They are a named enterprise, and this is regardless of their sales volume. And if they are covered, then we go to the next thing. They would be subject to minimum wage and overtime. Now, individual coverage is, if you're a smaller business and you're under that $500,000, and the individual coverage, it's a work week by work week basis. So if we have an employee that you have, say a small company, and you do like $250,000 a year, and you have, say, 2 employees that, work in the back, let's say they work in the back and they're just cooking, let's say it's a small restaurant, and they're not really moving anything in interstate commerce. And then you have 2 people in the front that may be taking calls over the phone. Sometimes Rhode Island's a small state. They could be taking a phone call from Massachusetts or Connecticut, because there's the boundary depending on where the business is, or they could be handling credit card transactions. And they would be covered individually. And again, it's on a work week by work week basis. It's very narrow, and it's not something out of all of the investigations we do a year. Maybe we'll have 1 or 2 cases that we test individual coverage. The majority of the work we do involve enterprises, and I'm guessing the majority of you folks here are have an enterprise that has 500,000 or more. And some of the examples of a small, coverage of individual coverage would be like a small construction company or a small retail or service business. So that's kind of the background. We always have to have coverage before we then can step in and look at what the obligations are. Once we establish coverage, we look at minimum wage, which the current federal minimum wage is $7.25, which is significantly lower than the state of Rhode Island, which I think is now $14 an hour. So obviously you're going to enforce the state of Rhode Island minimum wage. So when we look at wages, we look at all compensation to arrive at minimum wage. So it could be commissions, certain bonuses, plus tips received by eligible employees. We have a tipped rate, and then we allow a tip credit of up to $5.12 per hour. Under federal, it's $2.13 an hour. Under the state, I think it's at $3.89 an hour, and then they have to get they can take the tip credit up until the minimum wage. And there can be some reasonable cost of room, board, or other facilities if in fact it's for the employee's benefit.
Patty, can I jump in quickly for 1 second? Because
Sure.
I see the faces screwing up like, huh? Can you go back one
Oh,
slide?
sure.
This is all confusing here. When you think of tip rate, if you're a restaurant owner, you're thinking of, what do I pay the employees? So you pay the employees right now, the servers in the bar, $3.89 an hour is the minimum, I believe, in Rhode Island, the tip rate. This tip credit, or tips received as tip credit, the federal minimum to pay an employee is $2.13 an hour, not $3.89. So this $5.12 is the difference between the $2.39 cash wage you pay the person and the $7.25 minimum wage you must pay. That means they have to get at least $5.12 an hour in tips to bring them from the federal minimum of $2.13 up to the federal $7.25. In your state, in Rhode Island, you're going from $3.89 an hour up to $14 now. So the state would be looking to see that they make enough tips between $3.89 and $14, whatever that is, over $10 an hour in tips in order to make the state minimum wage. But that $5.12, you can kind of ignore Rhode Island because that's the difference between $2.13, which you don't pay, and $7.25 an hour. Is that, hopefully that's a little bit clearer. It's too many numbers here. Okay, thanks, Patty.
So lodging and board, I know this is a hospitality association, so you may have people that come and need lodging and board, and you provide it to them. And there is some credit that you can take, but there's 5 criteria that you need to understand in order to take that credit. The first one is the lodging has to be regularly provided by the employer or similar employers. The employee accepts the lodging voluntarily. They're not told you're going to stay here. Like, they can get the housing from somewhere else, and they voluntarily accept it. And it's furnished, in compliance with, the applicable federal, state, or local laws, meaning it's livable. It's maybe had a housing inspection, and it's not, they're just not being put somewhere where it's not compatible to living. The lodging is provided primarily for the benefit of the employee rather than the employer. And the employer should maintain records of the costs incurred furnished in the lodging. And it can't exceed the actual cost. So let's say you have a place that you're providing, and the actual cost to the employer is $800 a month. You can't charge like $2,000 a month to make a profit on them. It's more, it has to be really for the benefit of the employee. Other deductions that can come, you have to remember, you always have to pay the minimum wage no matter what in each work week. And there's certain deductions that if they're taken, then it would bring the employee below the minimum wage. So this would be something that if somebody damaged a vehicle or took a tool and it got damaged, or there was a cash register shortage, those deductions, if they bring the employee below the minimum wage, it's going to be a minimum wage violation. Now, this is an example, and you have to remember wage an hour, where we're looking at for federal, we're looking at $7.25. And this is a national PowerPoint slide. And I always say, wow, we're like, all these examples under the state minimum wages where we do outreach. Here, this is an hourly rate of $8 an hour, and the person worked 30 hours. The employer required a uniform cost that was a bona fide uniform of $30. So the employee was supposed to make $240 in that week, and then they had the uniform charge of $210. So because of that, when we multiply $7.25 times 30 hours, we get $217.50. So there was a shortage of the employee of minimum wage because of that deduction being taken. Now, when we work on hours worked under 40 hours, we only look at the federal minimum wage. And that's because there was a decision many, many years ago, I think in either the 50s or 60s, called the Klinghoffer decision, that basically said wage an hour, if there's an hours worked under 40 hours, they can only enforce the federal minimum wage of $7.25. So in this situation, the employee made $10 an hour, this would not be a minimum wage violation, and there wouldn't be anything due. So the thing that we're most concerned is if the employee is brought under $7.25 an hour. Overtime is a whole different issue, and that sometimes gets a little bit trickier. So tipped employees, you want to remember, a tipped employee is any employee that's engaged in an occupation in which they regularly receive more than $30 per month in tips. And it's applied on an individual basis. Now, that again is probably a bit outdated. There's a lot of employees that work that make more than $30 per month in tips as tipped employees. And even with the tip credit now that we take, especially in Rhode Island, the difference between the 389 and the 14, they're making it per shift, or within a couple of hours, they're making more than $30, or we hope they are. So like Cheryl was saying earlier, you can claim a tip credit if the employee is a tip credit employee, that is in a tipped occupation, and the difference brings them from the tip credit up to the minimum wage, because they're getting that amount in wages. In tips from the customers. They're the property of the employee. Tips are never property of the employer. And tips have to be retained by the employer and not shared with the employer or other employees except in valid tip pooling agreements. Now, I want to just touch base a little bit here because we've had a lot of different scenarios with tipped employees in recent years. I'm just going to go back to this slide. You want to remember that there's a lot has changed. Before, a tipped employee was your server that came to your table and they got a tipped rate, and that was part of it. Now you have a lot of employees that are making, $14, $15 an hour at, say, what the most common thing I can think of is a restaurant that's not a full service restaurant, that you go up, you order your food, and then sometimes you take a number, and then you sit down at a table and they bring the food out to you. They're paid at least minimum wage, and there's an iPad when you pay, and you can give a tip. And a lot of times customers will give, 5%, 10%, some give 20%, but that money needs to go directly to those employees that are doing that work. We've had recent cases where the employer keeps that money, and then they say what they are claiming is, that is to redistribute among the employees so that they can pay them minimum wage. That's not okay. The tips are always property of the employees. So that's just a recent trend we've seen. There's just a lot of there's tips everywhere. You go anywhere, they ask if you want to leave a tip. And it's become more often than not, sometimes the employer is keeping some of that tips, or a manager's keeping some of those tips. And they're always going to be property of that employee or the tip pool. Cheryl, do we have any questions on that?
We had one comment in the chat that I wasn't quite sure I understood. It said tips don't count hang on a second. Tips do not count towards the federal minimum tip credit wage. So I had said the tips are added to the cash wage paid to make sure that the employee earns at least the minimum. They may have meant, now that I look at it, maybe they mean that tips don't count, like you can't be paid tips only. I wasn't quite sure what that comment meant.
Oh, I'm sorry. Hi, guys. No, the comment was respect to uniform deductions. I don't know, just to be clear, because there'd been some conflicting guidance on our end, that if you have a server that makes $40 in tips and gets paid $389, you can't really charge that server for their initial uniform or uniform charges. That's my understanding. Is that correct? So tips are not a wage for purposes of determining the uniform charge. Is that correct?
Correct. Yeah. Anybody that's paid below the minimum wage under the feds, it's $7.25 or under. So someone paying $389, $213, they're going to be a minimum wage employee. For Rhode Island, if they're, under $14 an hour, they're going to be considered a minimum wage employee. Therefore, any deductions that are made are going to bring them below the minimum wage.
And no employee that's paid a tip wage is ever considered more than a minimum wage employee. So a lot of employers will say, oh, but they make $30 an hour, so we've got all that extra money in tips. We only look at it as cash wage plus tips that bring them up to minimum wage. That's the cutoff. They're never more than a minimum wage employee. So any deduction is going to bring them below the minimum wage.
And I think that's just something I wanted to make clear to everyone, because a lot of times you get a new employee, they're at the training rate of the minimum wage, say $14, $15 an hour. So typically we'll issue 2 shirts or a hat to that employee as part of starting employment, not charge them. It's the charge sometimes when it becomes excessive and they want extra uniforms or whatever. It's the question of not when you can and cannot charge. And for a tipped employee, you basically can never charge if they're at $3.89 an hour.
Or if they're at, for purposes of the feds, even if they're at $7 an hour, or and under the Rhode Island, $10 an hour, $12 an hour, until they meet that threshold or they make more than the minimum wage, then there could be a deduction.
In their standard hourly pay. So tips, even though they're taxable wages, are not considered wages for the purpose of this analysis. I think that's why there's a lot of
Yes.
confusion.
Absolutely.
Well,
Thank
just to, it won't even clarify, I guess, just to muddy the water some more. Wage and Hour has an enforcement policy that the employer is supposed to provide an adequate number of uniforms free of charge. So that means the way we look at it is if somebody's a part-time employee and works 2 shifts a week, you give them 2 shirts. If somebody's full-time and works 5 days a week, you should be giving them 5. But if somebody says, I only do laundry every 2 weeks, I want 10 shirts, then yeah, you could charge them for 5 shirts because you only have to give them 5 if they work 5 days a week. So it's a little bit loosey-goosey like that.
So as far as hours worked, employees have to be paid for all hours worked, and we're going to talk a little bit more about that. We're going to talk about time spent engaged to wait, on call, training, and traveling. And I'm not going to get into sleep time too much because I don't know that this industry has people that work 24 hours or more. And it's a little bit more involved. And I sometimes feel like this is a lot of information, and to add that in, I think if someone has questions on it, we'll be happy to answer it. But the first thing we have to remember is work not requested. We're going to talk on suffered or permitted to work. And anybody that is suffered or permitted to work, it's considered hours of work. Suffered meaning made to, permitted being made meaning allowed to. So let's say everybody's approaching Memorial Day, and some of you are in a high tourist area, and you need staff on Friday, Saturday, you need extra staff. You tell, the front desk clerk, we want you to work, 10 hours on Saturday, and it's going to bring you overtime. We'll pay you, no problem, but we need you there. That's okay. That's meaning you're telling the employee, they're an employee at will, that they need to work those hours. Then we get into suffered. In the same example, we have this front desk person, let's say on a Monday in February, it's a little slower, it's not really the busy season, and they're an eager employee, and they decide their shift starts, say, at 8 o'clock every day. They work 8 to 4:30 or 8 to 4. And they decide to come in every day at 7:30 because they're ambitious. They want to come in, they want to set up and maybe return some phone calls, check their email. And they regularly say they, come in at 7:30, and nobody says anything and changes their shift. And then the person gets their pay, and the manager says, well, your shift is 8 to 4:30. And I'm just throwing out examples of things that happen with the permitted. And the employee says, well, I came in at 7:30. And the manager says, oh no, your shift is 8 to 4:30. Well, nobody impeded that employee from beginning the work or said, really, this is what we need. We have you budgeted for this. Please don't come in early, and monitors it. That employee would need to be paid for that time. So you just want to remember those 2 words are, suffered being made to, permitted being allowed to. So it's important that when you have a lot of departments and you have a lot of managers managing departments, to just keep track of that permitted. And if somebody's coming in early, regularly, it's different if that employee just comes in early and you have a break room, they go in the break room, they're catching up with some of their colleagues, just having a coffee, they're not working, that's okay. But once they start, that work, it's permitted and they would need to be paid. So there's also waiting time. So as far as waiting time, we have hours worked where the employee is unable to use wait time for their own purposes, and it's controlled by the employer. This is an example, say somebody's working outside, and a thunderstorm comes and it's the middle of summer and you had just finished the lunch shift and you want the employee to stay on to work the dinner shift. And they, obviously there's nobody outside right now. It's primarily an outdoor and there's nothing they can do, but they're asked to stay and not leave and, to stay for the next shift. That would be hours work. They're waiting to be engaged. Now, not hours worked, the employee is completely relieved from duty and the break time is long enough for the employee to use for their own purposes. The same example, the employer says, yeah, go home, or, you can do whatever, if you want to, but you don't have to stay here, you can leave. And that would not be hours of worked. So on-call time, and this probably doesn't happen too much well, it probably does in a lot of hotels, especially with your maintenance folks. It would be hours worked if they have to stay on the premises or they have to stay so close that they can't effectively, do anything for their own purposes. Again, this would be somebody that you asked to stay on site, or, back many times when this provision was written, it was a little more limited. We didn't have beepers or cell phones, and if they had to sit by a phone and wait for a call, then that would be limited. But now, if somebody's allowed to go home and move about their home freely, and they have they have to stay within a 30-mile radius, and they can use their time effectively, and they're not so limited, that would not be hours of work. And once they're called upon, of course, it would be hours worked. So rest and meal periods, this is an issue that we typically can run into problems. A short rest break, 20 minutes or less, is not compensable under the Fair Labor Standards Act. It's mainly to improve, the employees, rest and refresh to do their job. Bona fide meal periods that are typically 30 minutes or more do not need to be paid as hours worked. However, they need to be completely relieved of their duty for meal periods. This is oftentimes an issue in certain industries, restaurant industry, and depending on sometimes they don't have them punch out. And you want to check with Rhode Island state law as to what is required for a break. Under federal law, we don't require that an employee get a break. We just say that if it's less than 20 minutes, it needs to be paid. If it's 30 minutes or more and it's uninterrupted, it does not need to be paid.
Hey, Patty, we have a couple of questions if you want them.
Sure.
Okay, the first one in the chat is, if your POS prevents staff from punching in early by, say, 10 minutes, is that enough to count as an impediment? I think you mean the impediment to working? To stop them from working early?
I think we have to go back to suffered or permitted. And even if the time system, and what I often say to employers, time systems are very sophisticated these days, and they'll really do whatever the employer wants the time system to do. And if the employer says, the employees in that department, they're coming in early all the time, don't allow them to punch in early, but they continue to come in early and work. That's being permitted, and it would be hours worked. So just because a time system doesn't allow something and they're working, it would be hours worked. Now, with the meal breaks, what oftentimes in many industries, and I don't think we see it so much in hospitality, but a lot of times in healthcare, they'll automatically take a 30-minute break out of their shift, whether they take it or not. And it's a slippery slope, because if the employee is taking it free and clear, that's okay. But if they're not, and there's no system in place so that if they're not, that they're having that deduction, if they get up to, if they work 40 hours and that additional 2.5 hours is being deducted, so that could be 2.5 hours of overtime a week. So time clocks have become very sophisticated. Back when Cheryl and I started, you'd go in and they'd have time cards, was punching in on the wall, and you could see, and they'd punch out for lunch. Now people have that app on their phone. They have it as a fingerprint. They have it in a computer. So it's really when people ask me when they run into this problem, what the best solution is, I usually tell them to have them punch in and out. I mean, there's enough availability for an employee to do that. But oftentimes there's reasons why they don't, but to have some kind of system in place so that if that employee it is paid. And a lot of times this can go on and then the employee leaves and then it can be a very expensive liability if you are automatically deducting a 30-minute meal break and not following up to make sure those employees are getting their meal break. Cheryl, were there some other questions? Because this is a very
The only
can
the
be
only
a
other
very-
one I understand was about their minimum number of hours work to pay for if somebody gets called in, and I referred them to the DLT and said that the FLSA only requires payment for actual hours worked. Like there's no minimum.
Can I just interrupt real quick? Anything that is specific to Rhode Island law, we're keeping the chat. We're gonna get those questions answered for you all as well with the Rhode Island Department of Labor and Training. So just want to throw that out there too. If there's something that's specific to Rhode Island, Ryan and I will take care of getting those answers for you.
The next
That was
thing
it.
that oh, great. The next area that comes up is training time, and training time spent in meetings, lectures or training is considered hours worked unless, and a lot of times, sometimes people have seasonal training, attendance is outside regular work hours and it's voluntary and it's not job related and the employee doesn't perform any productive work. Let's say you have a certain season and you have a great season and you invite everyone on Sunday afternoon for a employee appreciation picnic, voluntary. You don't have to, there's not gonna be any work performed. You can bring your family. That's not going to be hours of work. But on that same, scenario, you say it's required, there's going to be somebody that's going to come in and talk about something work related. That could possibly be hours of work. So you just want to be careful when you have training, and you can pay the employee at the minimum wage. You don't have to pay them if they're paid $30 an hour, you can pay them less for this time. But it is something that you just want to be aware of, what's voluntary and what isn't. Travel time. Sometimes some of you may have multiple locations, ordinary home to work travel isn't compensable work time. Travel between job sites during the normal working day is work time. So let's say you have two establishments and the employee's working at it, establishment A, and they work the lunch shift. And then all of a sudden the second shift, somebody just called out and they need another worker to go. And they say, can you go over there now? And it's the employee doesn't have enough time to go home and have enough of a, opportunity to take more time. They need them like right away. That travel from from establishment A to establishment B would in fact be hours of work. It'd be different if they work in the morning and then they can go home for a couple of hours and then they can refresh and then they're going to report to the other site later. It would be okay. So just to touch on hours worked again, and just, different things that come up, suffered or permitted, you want to remember, suffered meaning allowed to, permitted, suffered meaning made to, permitted being allowed to, engaged to wait, if the employee is, has to wait, at the establishment, on-call time, meal and rest times, training, travel time, and sleep time. There's certain provisions that if an employee works more than 24 hours, you can deduct a certain amount of sleep time. So just to minimize, just to summarize, minimum wage, you want to make sure any compensation is used as an offset. This deductions, you want to be aware of any deductions taken do not bring the employee below minimum wage. They most likely will if they're a tipped employee or a minimum wage employee, and tips, need to be retained by the employees. So now we get to the fun stuff. We get to overtime. And, when I first started with wage an hour, I remember they said, oh, it's time and a half after 40 hours. I thought, oh, this job's going to be so easy. And then And I realized there was so many extra things and so much more that was involved to overtime than just time and a half after 40 hours. Um, so, uh, so over time, each work week stands alone. You always want to remember that. And a work week is considered 7 consecutive days or 168 hours. And it's not, if you pay biweekly, it's not biweekly. It's an individual work week. So work week again is every 7 days. So then we look at, looking at the total compensation divided by the total hours worked to arrive at the regular rate. So this is wage and hour 101 that we stress to new investigators when they come on, that they always want to, when they're determining the regular rate, take their total straight time earnings divided by the total hours worked to what we call the regular rate. And the regular rate can't be less than the minimum wage. And this is total earnings. And this is going to include commissions, certain bonuses, could be cost of room and board facilities, and they're primary for the employee's benefits. And it's a much more complicated calculation than those words, but I always try to go back and tell them, start with the formula and then go from there.
Patty, can I pause you for a moment? It looks
Sure.
like we've got someone with their hand raised, Bill Kitsillis.
Sorry, Patty. Real quick. If you ask employee, like a lot of times you hire a new server and you hand them a menu or a study guide and get this done and study before you start to work. Are you asking, are they quote unquote working where they should be paid, like for training time?
Yes. Yeah. So they come in and they're hired, or is this they're just
They come in orientation. They go, hey, before your first day of work, here's the menu. You should review it before you come in, get yourself familiar. Like that's a pretty standard practice across the industry.
I would say the time that they come in, and are doing that orientation would be paid time. And if they're going to be a server or what, they can be paid the minimum wage for that time, but it
Sure.
should be paid time.
But I mean, when they take the menu home and you're like, you should really study this before, you kind of encourage them to study it ahead of time. Most of your seasoned servers do it on their own, but a lot of times it's a new employee like, hey, if you want to make this easier for yourself, here's this menu, you should review it, spend your time studying it. Where's that at? It's one of those gray areas.
Well, I'd look at, software, being made to or permitted, being allowed to, you're suggesting to them to review information related to the company. And I would say it's probably hours work. Now they might spend 5 minutes doing it and it would be de minimis. Maybe the best thing to do is have it in-house when they come in and they're going to be paid. I mean, it's always these little things sometimes that add up. And sometimes as an employee later on that says sometimes employees under exaggerate and sometimes they over exaggerate. And there's always that one place, it took me 3 hours to go through that menu and it was really involved and they have a huge menu and I memorized the prices. I would just be careful and maybe have them do it in-house when they come in, and they may do it. Cheryl, I don't know if you have any thoughts on that. I think you're on mute, Cheryl.
Sorry, Patty. Yeah, I had just answered it in the chat. My answer was that it was job related training and it would be compensable time. If it's done at home, I've told employers in the past to make sure to ask the employee to record the time and give them like a time slip. I spent an hour, I spent a half an hour, whatever it is, so that it can go in payroll.
Okay. What about if employees are using their phones because of app for the restaurant? Like we have a lot of restaurants now, there's new apps out there like Maintain IQ where they can use a checklist for their side work. And we give them the option of using an iPad, but they have the option of using their phone. Is that an issue?
Because they're using their own phone?
Their own phone, yeah.
I mean, as long as it's on the app, I mean, I think a lot of times the timesheet is on an app. So if it's on an app and it's being recorded, are you talking for purposes of using the phone or for hours worked?
No, like in other words, they're at work and it's their device. Is there an issue when it's their device? No, right? Like we don't have to compensate them for that.
Yeah. No, no, you don't have to compensate them for their phone. No, that's their choice. They, they can use the iPad and
Okay,
Our only requirement for employers is that you're responsible to maintain a record of actual hours worked by the employee, but we don't dictate how you do it. You can write it on a napkin, not that we like to see that, but I mean, if the time in and time out is accurate and total daily and weekly hours worked are accurate and you keep that record, you can use whatever method you choose.
no, I guess my nuance here is there's a very people, there's all sorts of like checklists now or training checklists that while people are working, they've punched into your POS system, that they access that checklist through their personal phone.
Mm-hmm.
Is
That's
that an
fine.
issue? That's fine, right? All right, someone,
Using
okay,
their own device isn't an issue for
Hmm.
us. In
thank
fact, a
you.
lot of employees now, whether it's hospitality or anywhere else, like say a hospital, take that for example, they have say ADP's app on their phone because it makes it easier for the employees to punch in and out rather than all waiting at the finger scan at the machine in the department they're in the hospital because there are so many employees. So there are a lot of types of businesses in the industry that have people use their personal devices to log in and out.
Thank you.
So now we're going to talk about exclusions from the regular rate. And then of course there's inclusions. So when purposes of calculating overtime, there's certain things that you can exclude from including in the regular rate. One is gifts. If you give someone a free t-shirt for something or a raffle prize or sign-on bonuses, certain types of bonuses. Discretionary bonuses such as a Christmas bonus, or just the company's had a good year, nobody knows anything, and you just decide to give everybody, $100 at the end of the year. Payments for time not worked, and reimbursement for business expenses, including business supplies, tools, cell phones, anything that you maybe travel. Those can be excluded from the regular rate. Along with that, this is profit sharing plans, retirement, perks and conveniences for the employees. Say if you give them a gym membership or a fitness class or some kind of tuition payment, those are all excludable, that you do not need to include them in the regular rate. Discretionary bonuses are usually, certain bonuses that are given at the discretion of the employer. The example I gave is the Christmas bonus or the holiday bonus, or the employer decides to give something at the end of the year and the employee doesn't know it's coming. Now, if the company has something where, they say if we meet XYZ sales, everyone's going to get a percentage of that. That's different. That's not going to be discretionary because the employee knows there's an incentive for them to do something, that they may get something. So the discretionary, I always explain it as the employee doesn't know it's going to be a discretionary bonus, doesn't know it's coming. And if they don't know it's coming, does not need to be included in the regular rate. A lot of times they do know it's coming if they meet certain criteria. So here we go back to the equation of the total compensation paid in a work week divided by the total hours worked. This formula, if you need to go back and look at it, please do. This is one that I stress when I am training new investigators, or teaching basic one with wage and hour. So once you get the total compensation and things that need to be included, and I think a lot of times in these slides, because we have to use these national approved slides, they always talk about exclusion. And I always want to say, you need to tell them what's included, because a lot of times they don't know. Certain things that need to be included is if they're paid on a commission, a production bonus, a shift differential. Those are just to name a few. Those need to be included in the regular rate for purposes of calculating overtime. Now, typically, you take the total compensation and arrive at the regular rate. The regular rate is all the straight time hours. Then you multiply by 1/2 times the number of overtime hours worked. So it may increase the overtime premium pay or the halftime. It's not going to be at time and a half because they've already been paid at straight time. It sometimes bumps up the additional halftime. And we're going to do a couple of examples. And this is where a lot of times people get confused, and if you have certain areas where you're not sure how to do it, if you have certain things that are paid out, the best scenario I can think of sometimes in hospitality is banquet charges. In this example, the employee is paid $9 an hour at 48 hours. So they made $432. Again, we're not, their wage and hour is not up to date with the Rhode Island state law federally. It's 725. So it's higher than the federal. Then they get a bonus of $10. So we take the 432 plus the $10 bonus to get $442 as the total straight time earnings or total compensation. We then take that and divide it by 48 hours. So we have a regular rate now of $9.21 an hour. It's a little bit higher than the $9, just a tiny bit. So from there, we then have to take the 921 times 0.5 to get 461 an hour. So if in fact, if it was at $9 an hour, it'd be a little less than that. And that actual overtime is $36.88. So if it was at the $9 an hour, the halftime would have been a little less. So it doesn't increase the overtime premium that much if there's not a large bonus, but sometimes there's a larger bonus, especially during the COVID period in healthcare. A lot of times they couldn't get people to work a shift, and they were giving an extra $500, $600 in a bonus. So it definitely affected their halftime premium quite a bit.
Patty, can I jump in for 1 second?
Sure.
I just want to say again, wage and hour thinks of things differently in terms of every layman's terms. An overtime week, it's time and a half. When wage and hour talks about overtime, we look at straight time and half time. So when you think of normal time and a half, time is straight time, and the half part of time and a half is our half time. So straight time is, if you were in this $9 rate, the straight time is the $9 straight rate for all 48 hours the person worked. The half time is half of the $9. That's your half time of time and a half. So 450 times anything over 40. So 450 times 8 is the halftime due. That's how wage and hour talks about it, because the $9 is going to stay the same, but that halftime part is going to change depending on how many extra payments and bonuses you throw in there. And in I can think of in hospitality, hotels and restaurants, the kinds of things I see as extra payments, like Patty said, for hotels, like on-call pay, maybe shift differentials. If you've got hotel clerks on the night shift, they might get an extra $1 an hour or 50 cents an hour for working from 12 a.m. to 8 a.m. In restaurants and hotels, a lot of times we see perfect attendance bonuses, an extra payment once a quarter for a perfect attendance bonus, or they have the customers fill out rating cards. You're going to get a quarterly bonus if your customer satisfaction cards are 90 percentile or more. Those are payments that are going to go in and affect how much halftime that overtime is going to be. But if somebody has a specific situation, call us, because we can type you out an example using your numbers in your specific situation, so you can probably understand it better.
And this
Thanks,
is something that oftentimes is confusing, and that's why, certainly give us a call and we can walk you through it. And again, I go back to this formula. So just remember slide 32, go back to there. And that's, this is like one of the most important things in wage and hour that we try to teach new investigators, because it's very confusing, not just to you, but it took me the longest time to understand it when I started. So we're going to go to another example. This is different hourly rates. So in this example, we have a janitor that's paid 21 hours at $8.50, so a straight time of $178.50. Then they work at $9 an hour for 26 hours. So it's $234. Now, typically the weighted average weighs more towards the more the hours worked. So if the more hours worked, it weights closer to the 9 than the 850. So as we go forward, we add those two together. So the total compensation is, then he worked as a cook too. No, that's the rate. Okay. I'm sorry. It doesn't the line above. So $412.50 divided by 47 hours total. So we have 878 as the regular rate. So like I said, it's going to be a little bit closer to the 9 than because it was just a little bit more hours. So then we take the 878 times 1/2. So we have a half time of 439. They have paid it straight time for the 21 at, 850 and the 26 at 9. So it's just the half time. So in this instance, the halftime premium is $30.73. Like Cheryl said, we always look at it as the straight time first, then the halftime. I know oftentimes, most payroll systems like to do it at time and a half and break it down, but some do, many do break it down this way. It really depends on which way you break it down, which way you prefer to break it down. So the total compensation at the end of the week would be the $412.50 is the straight time plus the $30.73 is the the overtime premium to get $443.23.
Patty, I have a question in the chat that I couldn't answer, but maybe if you answer it in general, everybody could hear the answer. So the question is, if you have a general manager that's hourly and they get a bonus for meeting food costs, does that bonus change the overtime wage analysis?
So if they're hourly, and they're just paid hourly, yes, it would be included. If they were salaried and they meet the criteria to be exempt, and we're going to get into salaried exemptions in just a few minutes, then they would not have to have that included because they're salaried exempt and they're not due overtime. But if they're an hourly paid employee, yes, that would, because they know that if they meet X, they're going to get Y. They know if they meet that food cost, they're going to get that extra compensation. Any other questions? Okay, as far as getting to improper deductions, we want to remember, just like minimum wage, if there's certain deductions that take away from the overtime, then it could result, oh, this is going on to salary. It doesn't say salaried employees and it just goes into improper deductions. So we're gonna slide right into salaried employees on that. That was a good transition. If somebody's paid a guaranteed salary, they need to be guaranteed that. And if there's an improper deduction made or there's some kind of deduction, it could jeopardize that salary. Now, the salaried employees, there is a safe harbor that if it was like a 1 week or something deducted, let's say they normally get a salary of $1,000 a week, in 1 week for some reason it was short 1 or 2 weeks, we would make them whole and bring them up to that salary as long as they met the criteria to be exempt. And we're going to get into the exempt duties. But that's, as far as a salaried employee, they have to be guaranteed that salaried amount. Before we get to that, I want to go through the salaried amounts. Now, before we even get to whether an employee is exempt under these white collar exemptions that we're going to talk about, they first have to be guaranteed a certain amount. The minimum amount right now is $684 a week. That is changing on July 1st of 2024. It's going to go up to $844. And then there's a quick transition to January of 2025 that it's going to go up to $1,128 a week. So they're splitting it up. And then after that, I think it's going to be every January based on inflation. Now, Wage and Hour is hosting a webinar on May 30th. There's 2 dates. And you can register on those. And I can put the link in the chat to our website as to when they are. And it's right on our front page of our website. So I'll put both our website and then the referral to it. And if you want to go on, they're going to provide some information on this. So just be aware, if you have someone on a salary and they're paid $700 or $750, that's going to change as of July 1st. Cheryl, are there any questions on the salary?
Not on the salary. I was just typing an answer to if an employee is paid at two different rates for bar versus server shifts, would you use the different hourly rates for overtime? So my answer is that the calculation's always the same. Total straight time earnings, not hours, guys. Total straight time earnings divided by total hours worked in all capacities. Then you owe half of the rate you get from that calculation by the hours worked over 40 a week. That's the only question so far, nothing on salary.
To throw a wrench in that, if they're paid below, if they're at 389 or they're paid below the $14 an hour, you always are going to take any minimum wage employee, tipped employee that's under the 14. The halftime's always going to be based on the 14, the Rhode Island state minimum wage. So let's say, and this is like a whole nother, this is where I was telling Heather we could do a short overview on this at some point. If they get paid $3.89 an hour, their overtime is going to be half of the $14 an hour. So it's going to be $7 an hour. So the straight time is $3.89 plus the half is $7. So it's going to be, I think, $10.89. So any minimum, under minimum wage, any tipped employee, anybody that's under the 14 in Rhode Island, under federal, if they're under the 725, the overtime is going to be based on the applicable minimum wage, whether it's federal or state. So just keep that in mind. And a lot of times that gets confusing to people. A lot of times they will pay it at $3.89 times time and a half, or if they're paid $7 an hour at time and a half, the half time is always going to be based on the minimum wage. In effect,
this is one you need to call us on too, because I can
Yeah.
think of loads of examples where, say, somebody is a bartender at $5 an hour for their bartender shifts, but then they get paid $15 an hour as the shift manager, and they're going to work over 40 hours that week because they have 20 hours at the bar and 25 as the shift manager. That regular rate calculation where you do, $15 times 25 hours plus the bar rate times 20 hours to get the total straight time. Well, that bar rate is going to be 14, not 5, the tip rate. You always have to put the full minimum wage in that regular rate calculation, which makes no sense to you after the explanation we just gave you on halftime, but that is the way you have to do it. So if you have a situation like that, employees working at multiple rates where one of the rates is a tipped wage, call us and we'll walk you through how to calculate the overtime.
Thank you, Cheryl. It's not easy. And we don't mind walking you through it at all. So we're going to touch base on the executive exemption, the administrative, and the professional. So this is going, as far as the executive exemption, and this is where most commonly in the hospitality people fall. Their primary duty is usually management of the enterprise, and they customarily and regularly direct work of 2 or more employees. This means, they have the authority to hire or fire, or recommendations to hiring and firing, and they're given certain particular weight. So the primary duty is management. So somebody that just is working as like a shift supervisor, and that, let's say you pay them on a salary of $700, they don't really hire or fire, and they're just kind of there to make sure people show up and do their work. If they're primary in it, but they may also be working, doing other things. They could be, working at the bar, and they're primarily not a manager. They're not going to qualify. But if their primary duty is management and they can recommend that hiring and firing, and you can only have so many executive exempt employees, there can only be so many people that they can supervise. There's also one, if somebody is 20% owner, they can also qualify under the executive exemption. And for that, there's no salary level basis. Did somebody have a question? Okay, the administrative exemption, this one is a little bit more difficult and a little bit more challenging, and can often be misapplied, not on purpose. It's just a very very in-depth exemption, and it's very narrowly construed. But this is somebody that's working, doing office or non-manual work directly related to the management or general business operations of the employer. And they regularly exercise independent and judgment in matters of significance. So this could be someone that's setting prices, making decisions, committing company resources, negotiating, and sometimes it depends on at what level they're doing that. Now, one example that we often run into is sometimes a bookkeeper. You know, it's a very important position in a company. They do a lot of times they do payroll, they do general, you know, things, some tasks in accounting, but not, they have certain guidelines that they're following. And the bookkeeper also has a lot of other information. Typically, they're following established guidelines, and they're not making they're making decisions, but not those that may directly affect the company at a profit or loss. But then you get to say a controller, where if they make a mistake, it could directly affect the company at a large profit or loss. The controller is probably going to be exempt under the administrative, and the bookkeeper is probably not going to meet the duties. And just a title does not make somebody exempt. You know, it really depends on their duties. You know, sometimes you see coordinator or analyst. It depends on what their actual duties are. Some examples of people that may fall under the administrative exemption are some tax, accounting. They can also fall under the professional. Some kind of regulatory compliance, purchasing, insurance decisions, possibly advertising, depending if they're working on a budget. If somebody's just, you know, doing certain solicitations and they're working with a small budget, they may not meet the criteria. Human resources sometimes do. Sometimes there's entry level human resources folks that don't qualify. And sometimes computer network. If you have a question on whether someone meets the administrative duty or not, you're best to check in with Cheryl and I, because we can walk you through it. And, you know, honestly, we tend to err on the side of caution. But, you know, it is an exemption that is oftentimes misapplied. And like I said, it's generally not intentional. It's just not an easy exemption to understand. I think one of my first cases, someone had everyone on a salary. And when I went into the final conference, I had prepped everything. They had everyone from the, you know, receptionist to the CEO on a salary. And I said, you know, I explained the administrative exemption, and the controller said, well, everyone in the company is exempt. They all make decisions. And I was like, oh boy, this is going to be a hard one to resolve. And I had to go through and explain why, and just, you know, it's just, if you have someone on a salary, and they don't meet the executive, that's an easy one, I think, to kind of apply. But if you have something on the administrative and you want more information, you can always send us a job description and we can talk about it. As far as professional, this one is a little bit, again, more cut and dry. You know, somebody that's working in a field of science and learning, customarily, that requires a prolonged course of study. And that's usually somebody with at least a bachelor's degree, and they need the degree to do the work. Now, oftentimes in hospitality, we have culinary people. They have to have that degree in order to qualify under the exemption. Now, say somebody has a culinary degree of a bachelor's degree, and they come in and they're just a line cook, and they're just working along the line. They're not creating menus and doing work related. They don't need the degree to do it. They're not going to qualify. They actually have to be doing the duties of the professional exemption to meet it. So just because someone has a degree doesn't make them exempt. It has to be specific, and they have to be working with that degree. A teacher, a lawyer, a doctor, certified medical technologist. This outlines their professional study. Dental hygienists that have a 4-year pre-professional study, a certified physician's assistants. This changed about 20 years ago. A lot of these professions weren't in here. Registered nurses, a lot of times they're hourly, so they don't meet it. A lot of times someone will say, well, they're exempt, but they're not on a salary. First, we have to look if they're on a salary, and then we look to see if they qualify under the what we call the white collar exemptions. And these are some examples. Again, lawyers, teachers, accountants, pharmacists, engineers, actuaries, licensed funeral directors, embalmers, athletic trainers, and chefs. And I think chefs is probably the one that would mostly apply. And just make sure that if they have a culinary degree, they're say a lot of times if they have the culinary degree, where I find that they're not also supervising, like the executive chef usually supervises. Sometimes a pastry chef doesn't supervise anybody, but they have a degree and they're doing their own creating of their pastries and desserts. And so some non-exempt professions that oftentimes are misapplied we have our licensed practical nurses, paralegals, engineering technicians, bookkeepers, like I said earlier, and cooks, again, that aren't, performing that work, that, don't have the degree, or they have the degree and they're just doing cook work. There's also an artistic or creative under the professional that, for people that have music or acting and writing. And we oftentimes don't have too many calls on these, but once in a while we do. Again, there's also a computer related occupation, and in the computer related occupation, not only can they can be paid a salary, but they can be paid at least $27.63 an hour. And if they meet the criteria to be exempt, they can be exempt under that, being paid hourly as well. This came about when the Y2K there was a lot of computer work being done and a lot of prep. And I think there was a lot of people working in excess, but they weren't guaranteed a salary. It depended on the workflow, but they met the criteria of these different duties. And so there was something that was passed that allowed them to be paid a minimum hourly rate of, I think, $27.63. It was like 6.5 times the minimum wage at the time, which was $4.25. And then as long as they were doing one of these, one of their primary duties was, applications of systems analysis or design or development. In these. So I don't know, this probably isn't something that falls in hospitality all that much, but here we go with the 27.63 or the 6.84. And I don't think this hourly rate is changing with the guaranteed salaries, but we haven't heard anything. That doesn't mean that it's not. It hasn't been changed since it went into effect. There's also an outside sales exemption. And that's primarily for employees that are working outside. Their primary duty is to work outside with sales. They're not working inside, and there's no salary basis or minimum salary basis. Just take a water. Cheryl, do we have any questions?
I'm just answering one. It goes back to the tip question, though. I missed Jennifer's question. She asked, I gave a regular rate example, using the $14 for a tipped employee, and she's asking if it's saying that all overtime is calculated using 14. I'm trying to explain that even though you pay the $3.89 an hour, the $3.89 plus the tips is supposed to equal the minimum wage, so that when you do the regular rate calculation, you have to use the $14 in the calculation, because that's what they actually earn between the cash wage and the tips. That's it. There's no salaried stuff.
Okay. These are just some common overtime violations, failure to include things in the regular rate, shift differentials, combined hours, and failing to calculate the correct cash overtime rate. Sorry,
You want me to go for a minute? Tell me if you need to stop.
Yeah,
coughing.
do you mind if I just, I'm gonna just get a little
Yeah.
bit.
Where do you want me to pick up?
Do you want to just talk about some common overtime violations?
Sure.
Right here. And
Just with salary or?
yeah, just,
or
some common things with white collar. And
Okay. I would say in your industry, one of the most common is backroom administrative people. So a lot of people will just put the payroll person or administrative person on salary. Now, this person normally will do all the new employee intake and onboarding paperwork, fill out the W-4s, sign them up for all the benefits, that kind of thing. Get them in payroll. That person might also add the hours in the POS or double check the hours and get them approved by the manager and make sure everything's going through to the payroll company is correct. That is considered rote routine administrative work. When we talk about exemptions, they are people that work normally at the higher levels of the enterprise. They're the people that are making decisions that can affect the profitability of the company, people with real decision-making authority and discretion. So for somebody in the back of the house, you're talking about if you got that one person, but they can write checks without asking somebody, they can pay the bills and decide which ones to pay. I don't have to run to the owner or the general manager to say, I have a problem, what do you want me to do? Or which bill should I pay first? That's the difference between somebody with discretion and decision-making authority versus someone who's doing a routine job that they get assigned their duties, and those are the duties they do. But if they come up to anything that needs a decision, they have to go to somebody else to get the answer. That's pretty much the cutoff for that kind of thing. Out in the front, say front of the house in a restaurant or even in a hotel, I guess, the person who's handling customer complaints. If I am the front of the house manager and I can decide, all right, we're going to comp them a bottle of wine, we're going to comp their meal, I'm going to take care of a customer's complaint, I'm going to remove this from their bill. That kind of person, if they're on salary, they are making decisions that rise to decisions that affect the profitability of the company. Let's see, what else in hotels is so different from restaurants. Trying to think of anybody else on salary. In the kitchen, again, the executive chef, the easiest exemption to me in either one, whether it's any kind of hospitality, is the executive exemption. That's the one where management is the primary duty and they have to supervise 2 or more full-time employees, meaning 40 hours a week, or the equivalent, meaning they can have 4 people that work 20 hours. As long as they have 80 hours of subordinate help or more, and they're spending their time in directing those people, assigning the work, supervising the work, handling problems they come up with, that person, if they get a guaranteed salary, will be exempt from record keeping and overtime. And the reason these exemptions, did somebody just ask a question? No, the reason the exemptions are given is because they're supposed to be employees at the upper levels of a company. So they're narrowly construed, meaning we will really look at the duties, the actual duties of the person when we go into an establishment and see if they qualify at the level they're supposed to be at. I don't know if while Patty's going, if anybody's got some particular person they want to throw in, like, what about this kind of an employee?
I'm back, Cheryl, so I can, want me
Okay.
to, if someone has
Yeah, go
questions,
ahead. Sure.
if they have questions on some of the positions, you could certainly, we could talk about it. I just want to finish up, and then if we have other questions, so I just want to kind of get to some things. Time is just flying by here. So we're going to talk about youth employment. If some of you came to the seminar a few weeks ago, we talked a little bit about certain areas of youth employment. 16 and 17-year-olds under federal. So you always want to check with the state. There's unlimited hours and they can work in any occupation other than those that are declared hazardous. 14 and 15-year-olds, there's a much more restrictions that we're going to go over. And children under 14, they really are not, are permitted to work in non-agricultural occupations. Oh, that's it for child labor. I thought there was a slide on the 14 and 15-year-olds. So the 14 and 15-year-olds, they can't work more than, and we certainly can drop in the chat, again, our youth employment section of our website. They can't work more than 3 hours in a school day or past 7 p.m. between Labor Day and June 1st. And I want to stress past 7 p.m. because that includes a Friday night, a Saturday night, a school vacation until they hit June 1st. Then they can work as late as 9 p.m. Between June 1st and Labor Day. They also can't work more than 8 hours in a non-school day or more than 40 hours in a non-school week. They can't work more than 18 hours in a school week. So there's a list that you can follow. And I had given some little handout folders to Heather to have on hand if you need them. It's a nice handy thing. And if you need one, let me know, give us your address and we can drop one in the mail. In the last section, we did talk about youth employment, and there is significant increase in the civil money penalties right now in youth employment. So if you are thinking of hiring a minor, please know what the restrictions are, and you need to stick to them because the civil money penalties have increased quite significantly. As far as record keeping, you need to keep a record of daily and weekly record of hours of work. You should keep them up to 3 years. And many times employers will say, well, if I don't have a record, they can't find anything. Please remember that if there isn't a record of hours, we have to reconstruct the hours. And oftentimes that comes from interviewing employees, gathering information. I think records in general have become much better over the years with electronic systems, but it always should be accurate. So just remember, the time clock can be a great resource, but again, they're always programmed the way usually you decide to have them programmed. You should have a date of birth for anyone younger than 19 on file. And again, with the new civil money penalties, there is a civil money penalty if you don't have a record of those minors under 19. So if they're being hired, you want them, I don't know if the state of Rhode Island has like what they used to call in Massachusetts as working papers. Maybe get that, have the minor provide that to you when they're hired. You need to, again, keep a rate of their regular rate of pay, their total hours worked, and any deductions that were made. Say if you gave someone a loan, you want to record that so that it's there. If somebody, then the employee then goes off and says, oh, well, they deducted $300 from my pay. And then you have something in writing that says, we gave them a loan, and here it is. There are also posters that need to be posted. Again, we have the federal minimum wage poster, and we have a group of posters that you can get off of our website. I think there's an employee polygraph, and there's some other poster, family medical leave. But if you need any, I can always direct them where to get them, Cheryl and I, on our website. We used to have a lot more printout ones. We still have some, but they're definitely getting away from us distributing paper. Everybody's going electronic, including the federal government. As far as our enforcement, I want to talk a little bit about it. I didn't talk too much about in recent years, we've had a lot of situations where we have pursued retaliation on FLSA investigations or even before the investigation starts. And I'm only doing this to, educate and let you know, that this is a section in the Fair Labor Standards Act called the 15A3. And it's a retaliation part of the act that, let's say, for an example, an employee goes to their employer and says, I'm getting paid straight time for overtime. Why aren't I getting paid overtime? And the employer doesn't really know why, just decides that they're paying straight time, doesn't really have an answer. And then 2 days later, all of a sudden that employee is let go from employment. I think it's important to understand that employee then comes to us and says, I asked about my overtime and then I was terminated. We then, look to see if retaliation happened and whether or not, it was in fact retaliation. There is punitive damages for this if this happens. So you just want to be careful. If you have an employee that is not performing or not doing what they're asked, just the most important thing I can say is document. Employees sometimes remember the bad weeks and not the good weeks. And you just want to make sure that if somebody does present something, that you have the information. But that retaliation clause is in the Fair Labor Standards Act, and you just want to be very careful if an employee has concerns, that they're addressed and there's no retaliation. There's certain things that we don't require. Again, we don't enforce meal or rest periods, vacation, holiday, severance, sick pay. There is certain sick pays I know under the state of Rhode Island now. Premium pay for weekend or holiday work, a discharge notice, limit on the number of hours a 16 or older can work, or pay raises or fringe benefits. I always look at the slide and I think, geez, it doesn't sound like we do anything. These are things that are excluded from what we do. When we do an investigation, just to give you an overview, what we do is we go in and typically we go back a 2-year period. Sometimes we go back a 3-year period if there's certain willful violations. We try to work with, we come in, we usually do an initial conference. We'll look through the payroll. Now we have an electronic system, so sometimes we have the payroll beforehand. We then interview employees to make sure the records are accurate. And then if there's a problem, then, oh, Cheryl just lost power. If there's a problem, sometimes there's back wages due, and sometimes there's liquidated damages as well. But we try to work with you to come up with an agreement. And sometimes we are unable to resolve it, and we'll refer it to our solicitor's office sometimes, or we may let the employee know they have a private right of action. And sometimes the employee, elects to have a private right of action, just depending on their circumstances. There are penalties.
Patty,
Yes.
sorry, I don't know if you had asked me anything. I'm having a hellacious thunderstorm and I just lost power. It just got me back.
Yeah.
So
I'm sorry.
sorry.
I obviously didn't turn my Teams chat off. Oh, Cheryl just lost
No
power.
problem.
It looks really dark. Willful violations, there is certain civil money penalties, again, the youth employment, and willful or repeated violations can also result in that. I know when I do events like this, I know most of you are here for education, and you're trying to do the best. I know a lot of times there's so much for you to know, not just under wage and hour, but so many other acts. And, if we can be of any small help to you as you have questions, as you go forward, please, reach out to us. We seriously, I have people that, call from outreach events from many years ago. I still have contacts in Massachusetts where people reach out. But I just can't stress enough, to, use us as a resource. And we'll be happy to help. I'm going to put in the chat, I'm going to put the seminars that we're going to be hosting, so that you have it. And I don't know if there's any additional questions, or if anybody, I thank everybody for their time, and I hope we gave some information that was helpful. And Cheryl and I will hang on for a few minutes if anybody wants to stay. I just put in the chat the seminar for the overtime protections, which I think it would be a great, if you have time to attend one and you have salaried employees, I think it would be worth attending.
Well, Patty and Cheryl, thank you very, very much. What an amazing amount of information that you packed into a just under 90 minutes. I am extremely impressed with how much data and information you were able to share with us. I'm going to go ahead and stop the recording portion of this session.